What's up, guys? It's Nick from Nick's Dividends. If you like my content, please like and subscribe. Microsoft and Apple both had horrible days. Microsoft dropped about 2%, likely just a small pullback as it has no negative news and has been on fire lately. Apple dropped over 3%, which is likely because of an announcement that they shipped 40% less PCs in 2022 than they did in 2021. This honestly shouldn't be that surprising since everyone was buying computers like crazy in 2020 and 2021 due to COVID. I reduced my position size in both companies due to some unexpected race car related bills. Tuesday was a good day overall, but Realty Income dropped by about 0.9%. The only news from Realty Income was that they declared their 634th consecutive dividend. Most stocks were within 0.5% of their open price. I closed out my Apple and Microsoft positions and put most of the money into VOO. Due to this, even after I pulled out the $2,300 out of the account, I ended up with a high enough dividend yield to make up for the withdrawal. Wednesday was pretty sideways. AbbVie rose about 0.6% on the news that it could beat the earnings estimates again. The S&P 500 as a whole was down about 0.4%. As a result, both VOO and SCHD were down about the same. VOO is an ETF that tracks the S&P 500, and while SCHD doesn't track the S&P 500, it does contain several companies that are in the S&P 500. Pretty much all of my other positions were within 0.3% of their opening price. On Thursday, the Producer Price Index report was released, and it came in at negative 0.5% versus the 0.1% expected, which means we saw some deflation on the producer side of the market. This caused the market to have a great day. VOO was up about 1.28%. Johnson & Johnson also had an amazing day, which was very likely related to this report as they have absolutely no news whatsoever. Realty Income dropped about 0.6%, but that's not all that surprising considering REITs are getting hit hard right now, and I am okay with it as I have a dividend coming in tomorrow for Realty Income. On Friday, JP Morgan had an earnings call and blew the expectations out of the water, with an earnings per share of $4.10 versus the $3.25 that was estimated, beating the estimates by about 20%. This caused JP Morgan to skyrocket about 7.5% and single-handedly carried the portfolio to a green day. The financial sector rose on the earnings news of several banks, signaling the banks are strong, which may allow the Fed to continue the interest rate hikes come May. As a result, the market dropped. Duke Energy was my worst performer, dropping about 1.5%, followed by Realty Income, which dropped about 1.1%. There were a lot of changes in the portfolio this week. As mentioned, I had to take some money out for some unexpected race car expenses. Due to this, I sold positions in both Apple and Microsoft, took out the money I needed, and put as much into VOO as I could. VOO has a much higher dividend yield than either Microsoft or Apple and tracks the S&P 500, so I think it's a great investment. The money I couldn't put into VOO, I used to buy one share of Duke Energy and one share of Realty Income. Friday, we also received a dividend from Realty Income of $5.40, which was able to grab us about 0.09 shares. Taking a quick look at the positions page, I left Microsoft and Apple on there because I do intend to start positions in them again, but we'll need to wait until the wash sale rule expires. VOO is now up to 10.01 shares, Duke Energy is now up to 16.15 shares, and Realty Income is now up to 23.27 shares. It's nice to see most of my positions in the green again. AbbVie is almost back, only down about $1 per share. Unfortunately, Duke Energy and Realty Income are still both down about $75 a piece. The dashboard looks nice. The yield on cost is still above the dividend yield. We are currently up about $250 on our current positions. And then looking at the income, even while taking money out, we ended up with a higher annual income. This is because while I sold about $4,600 worth of shares and took about $2,300 out, I put the remaining money into funds that are yielding at minimum 2.7 times the yield. This allowed us to cross the $61 per month mark while using about 10% less money. Well, that's it for this week. Thanks for watching. Please like and subscribe. Hope to have you go join me again next week.